Here, on US dollar Swiss franc 1 hour time frame. After this up move, the price was rejected at this level, and as an effect of the bullish exhaustion, price formed a doji candle. If we look left, we can see that this price is a key resistance level. Now, what makes it a key level resistance? And not just a resistance level. By counting the number of price reactions, we can distinguish the level if it is a key reversal level, or just a simple and plain price level. 1, 2, 3, 4, and 5. Having 5 price reactions is more than enough for the level to be considered as key reversal zone. Now, if we enter a trade right after the doji candle and targeted the key support level, we would have gained 3.47% at 1% risk. Hey guys, TradePoint here, and welcome to our YouTube channel. On this our third video, we will be discussing support and resistance level. Plus, we will cover what makes a level a key reversal zone. Before that, please do subscribe to our YouTube channel for you not to miss high quality content and trading lessons. As always, let's start first with the content of this tutorial. First, we will discuss the basic support and resistance lines. Then, we will cover how support and resistance becomes key level or zones. We will also touch how a trend line acts as a support and resistance. Next is how support and resistance reverse in roles. Of course, we will cover the trading strategy for support and resistance. Last but not the least will be the entry confluences for support and resistance. Here, on pound-yen 30-minute time frame, by observing the chart, we can identify a lot of levels. First is this support line right here. Also, here, another level. Resistance turns support right here as well. Another level right here. This level here as well. Another resistance turns support level. Resistance, again. Then, last one resistance level right here. All of this are support and resistance levels. But first, what is a resistance and a support level? Resistance is a price level where rising prices stop, change direction, and begin to fall. This level is viewed as reversal points where prices peaks. Support, on the other hand, occurs when falling prices stop, change direction, and begin to rise. Likewise, this level are reversal points, but prices here bottoms. If we go back to all the identified levels a while ago, we can see that we can trim down the levels into only the key reversal levels or zones. However, what does it take for a level to be considered as key resistance or support level or zones? The answer, first, it has to be an obvious top zone or bottom. Second, it needs to be tested at least 3 times. The more the level or zone was tested, the better, and the stronger the zone is. Third one, there should be a momentous reversal from the zone. Then, fourth one, it should be a recent trading area. Last but not the least, it should be tested as both support and resistance zone. However, this list need not to be completely fulfilled. Appearance of at least 3 from these requirements would be enough. Now, let's go back on pound-yen 30-minute time frame. Here, we can see that we have identified support and resistance as horizontal lines, or levels. But, a key resistance and support level should be in the form of a zone. Again, a strong reversal level, or key support and resistance level, is better represented by a zone, instead of a horizontal line. Let's identify where are the key reversal zones in this chart. First, is this very obvious resistance turn support level right here. If we check on the qualifications. First one, the zone is an obvious top or bottom. By looking at the chart, you can easily see that the level is an obvious reversal area. Second, it should be tested at least 3 times. Let's count how many times this level has been tested. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This should be more than enough to be considered as key reversal area. But, we'll still check the other qualifications. Third one, there should come a momentous reversal from the zone or level. If you look left, there has been momentous reversals coming from this level. This one on the leftmost. Second one here. Third and last one here at the last reversal. Fourth from our list, it should be a recent trading area. As you can see, this is at the rightmost part of the chart. Lastly, and the fifth one, it should be tested as support and resistance. Here, it was used as resistance zone or level. Then, the level was converted into support zone after price passed through it. As you can see, all 5 qualifications were satisfied. Thus, this zone right here is a key reversal area. Now moving forward, let's discuss how trendline can be used as support and resistance level. Here, still on pound-yen 30-minute time frame. The key in plotting trend lines is simply connecting the price swing points. If you are getting confused why we didn't construct our trend line like this and have chosen the other way around, it is simply because this trend line has more swing points compared to the other one, which makes it stronger and more valid trend line. For the trend line acting as resistance, we have these swing points right here. Again, always note that, in constructing or drawing a trend line, always choose where there is more price swing points. In trading this kind of price action, it is key to note that price will run within the channel formed. Okay, on to the next topic. Support and resistance can reverse roles, specifically after a breakout. Here, on Euro, Australian dollar daily time frame. If you observe this key resistance level right here, which have 3 reversal price swing points, it acted as support level after this price breakout right here. As you can see, it was tested 3 times as well. Thus, a conversion of key reversal level like from resistance to support is valid. Here, on another example, pound Swiss franc 4-hour time frame, we can see that this level right here has strongly acted as support level. It was actually tested for 5 times. 1, 2, 3, 4, and 5. Then, price has finally broken the support level. But, for the pullback of the price, it was retested as resistance. It actually took 3 retests as key resistance level. Then, on the third and last retest, price surged bearishly. After discussing all the basic concepts of support and resistance, we will now move to the climax of the tutorial. The trading strategy technique for support and resistance. Here, on Aussie, Swiss franc, 4-hour time frame. If you look above the price action, we can clearly see here a key resistance level. After this bearish pin bar candlestick reversal pattern, we could have entered a sell order. The target would be the key support level below here. Then, we could have gained a 4.4% at 1% risk. Next, we could also enter after this pin bar formation right here. Then, same target. For this trade, it would have been 3.85% gain. Last one, another pin bar entry right here. Sell stop order after the pin bar candle, and same target for the trade, would have given us a 5.36% gain. If we look at all the 3 trades, we had 3 opportunities to gain at least 3% at 1% risk. Now, if you want to learn more about candlestick reversal patterns, check our first YouTube video above. On another example, here on pound yen, we can see this level acted as resistance level right here. Then, price broke out from the level and acted as support level. Another price breakout, then, of course, this level should be notable after acting as resistance and support level. There is a high chance that it would act as a resistance level. As price pulled back, what we wanted to do is to wait for a confirmation in the form of a candlestick reversal pattern. Then, the appearance of this doji candle gave us a confirmation for a sell entry. Again, a sell stop order after the doji candle and targeting the most obvious support level would have given us a 3.37% gain at 1% risk. Moving on to our last topic. After discussing the basics and the trading strategy techniques of support and resistance, we will now move to what are the confluences with support and resistance level, which will make or add an additional confluence to your trade entries. First off, here on Kiwi Yen, 1-hour time frame. As you can see here, there is a support level which can possibly be converted into a resistance level. As what we have discussed a while ago, rejection of key reversal level, then candlestick reversal pattern, would be enough for trade entry. But this time we will add another trade entry confluence. First off, the Fibonacci retracement. Here, we could see that an engulfing bearish pattern had appeared, rejecting the resistance level and, in addition, the 78.6% Fibonacci level. Again, for our trade entry, we had rejection of resistance level, formation of bearish engulfing pattern, and rejection of 78.6% fib level. This trade entry checklist would be enough for confirming an entry for a sell entry. By targeting the last lower low, we would have gained 3.63% at 1% risk. Other than Fibonacci retracement levels, we could also use indicators, like for instance the 50 EMA. The more the trade entry Confluence, the better. This makes your trade bias more valid, and, of course, increases the probability of winning. Rejection of key reversal level. Another engulfing pattern. Rejection of 50% fib level. And, lastly, rejection of 50 EMA. Here, we would have gained 2.34% at 1% risk. Now, if you want us to cover a separate tutorial on 50 EMA, and the Fibonacci retracement level, especially the golden ratio, comment down below. Here ends our video tutorial for support and resistance. As always, don't forget to like this video, and subscribe to our YouTube channel, so you won't miss our trading video tutorials. Happy trading and Happy New Year to everyone.